Hey, JJ here with the Art of Value, episode 69. So I better mention Tesla, hadn't I? It's Elon Musk's favorite number, 420 and 69. In fact, I was joking the other day, yesterday, that my buy price for Tesla is 420.69, and the way things are going, it might just get there. In fact, it would not surprise me. It would come as a great shock to many Tesla shareholders, but I think it's possible. Certainly, a number with a 5 in front of it is very close now. But anyway, starting with some positivity, because what I'm going to we're going to talk about what's happening in the market. It's just it's an incredible time in the market. It's part of why I'm talking about market movements daily at the moment, because an historic time, which we've had many of in the last couple of years, but it continues to be, and now we're kind of it's a bear market. I mean, reluctant to say the S&P 500 is in a bear market, but it kind of feels like a bear market. Nasdaq's down 30%, Russell 2000 down to bear market territory. And so, but I just want to start with a bit of positivity. This caught my attention. If you're on video on Spotify or YouTube, you'll see this. I'm going to read a bit more for those on audio on Apple or Google or wherever you get your audio podcast. So insiders put recession angst aside to binge on their own stocks. This is from Bloomberg. Purchases poised to top sales for the first month since March 2020. Buoyancy at odds with souring mood from Wall Street investors. So basically, the market sentiment is bleak, super bleak, and but insiders have been buying. So that's interesting to see. Not surprising. Some have been selling, of course, including Elon, for reasons other than expensive, of course. Bill Gates has been shorting it. But anyway, so the article goes on, investors bailing on stocks because they're afraid of recession that may want to consider the buying spree that is happening among people in charge of American businesses. Corporate insiders whose purchases correctly signaled the bear market bottom of 2020 are bottom fishing during the S&P 500's longest stretch of weekly losses in 2 decades. I haven't got that stat. I didn't carry on with that article, but I think it's something like 1,100 different insider buys, or more buys than sales, something like that. So that's just a touch of positivity before we go on to the bleakness. So another bit of positivity is Zoom Video actually had beat expectations on their reporting, and it's up 5.61%. I think it was up more pre-market, but until Snap didn't report, but had a pre-reporting announcement. But Zoom Video scraping the bottom, but up 5.6%. Kind of probably one of the only very few green tech stocks, if any, around. Actually, I know of another one, Topicus. Topicus, which I've been buying, was green in the last session. Small cap. So Snap, let's get on to the bleakness. Snap down 43.08%. Whoa, it was already down big. It peaked at 83. It peaked at 83.1, and it's now 12.79. That's not funny, is it, for Snap shareholders? But brutal, absolutely brutal. So this is pretty much what brought the whole market down in the last session, because the reason is, it's not just because of Snap, because it's sort of not so important in the whole scheme of the market or any indexes, but the reason. Snap stock crashes after macroeconomic environment warning. Snap stock closed 43% lower on Tuesday after slashing its second quarter profit outlook and giving a warning about the macro environment. Shares of the parent company of social media app Snapchat sank below the IPO price of $17 during its biggest daily drop on record. Since we issued guidance on This is the quote from the company. Since we issued guidance on 21st of April 2022, which was not long ago, a month ago, the macroeconomic environment has deteriorated further and faster than anticipated, Snap wrote in an SEC filing. So obviously their business model is based on advertising. So especially what happened was businesses that rely on advertising, had anything to do with advertising, took a drop overnight. Overnight for me, sorry. And so we see Google down. Oh, well, let's just go on. So another headline: Snap stock crash. Highly unlikely that weakness is isolated, Jeffrey says. Following a profit warning Monday from Snap, investors have another excuse to shed tech shares. Snap stock plunged 40% on Tuesday, falling below the platform's initial IPO price, blah, blah, blah. CEO Evan Spiegel warned employees that the company will miss its targets for revenue and adjusted earnings in the current quarter. When reporting first quarter earnings last month, Snap expected revenue growth of between 20 and 25% and adjusted EBITDA to be between break-even and 50 million. But the company walked back the guidance in an SEC filing, which I've just been through. The news hit social media stocks hard, sending Snap's peers tumbling during intraday trading on Tuesday. Shares of Facebook parent Meta, Google parent Alphabet, Twitter, and Pinterest experienced a collective $160 billion wipeout. Well, that's kind of meaningless, the actual number, because Google's massive and Facebook. So it's more to do with the percentage drop. And also, let's moving on. Tesla. I'm going to mention Tesla, episode 69. Let's talk about Tesla a little bit. So down 6.93% on last session, and so it's continuing, and it's got a 6 in front of it. 628. It's getting down into the low sixes now, which is not actually as low as it has been. Was it this year or anyway? I don't know. Let's have a look. So anyway, so the last 5 years still up 866%. Tesla shareholders will be at pains to be pointing out that, but the price now is kind of back to December 2020, which is nowhere near pre-pandemic levels. Pretty scary for Tesla shareholders to think that it could go back to pre-pandemic levels, or I mean, it took a huge jump in 2020 up, like down, but there's a huge. If it was to drop further, it doesn't go back. We wouldn't have to go back too far in 2020 to go down to the 400s. So interesting times for Tesla, and of course there are many reasons for it. From all the news was good. The stock rocketed, and now kind of all the news is bad. There's not much good news, or it's being buried amongst the headlines of controversy of Elon's alleged harassment, whichever you say. I like harassment. And factory shutdowns in China for a while because of COVID, ongoing supply chains, expensive raw material costs, big recession coming. Could that make people drop off waiting lists, etc.? There are just many things. So, and if we look back, so the 5 year, it's been over 1,100% over 5 years still, and that's a 65% CAGR. So there's a lot of room to drop, but the company fundamentals are good. I'm not going to dismiss that, because they are. It's the last reporting results were stellar, amazing, great. So this is just a tweet that I saw by Special Situations. Tesla was $130 pre-COVID, which wasn't that long ago. See you guys back there. So friendly reminder saying so. Bit of sarcasm there. And also it's affecting ARK, of course. Tesla was pretty much the only stock holding ARK up. When I say holding it up, it's dropped a huge amount back to, well, we'll see. February 2021, early February 2021, it was $156. Now $39.21 today, dropping 6.95, similar to Tesla. Tesla as it happens. And yep, back to January 2018 we are now. The price is back to not just pre-COVID, but January 2018. Amazing. And the 5-year, Kathy Wood always talks about 5-year timeline. So over the last 5 years, we're looking at 56% price return over 5 years. 56%. And that's a CAGR of 9.3, not only 9.3 CAGR, compound annual growth rate. Funnily enough, that is now not beating the S&P 500. We've got the SPDR SPY 500 ETF has had a gain of 10.8 CAGR over the last 5 years, 67.2% return. So ARK is now not beating the market benchmark over 5 years, not just over 1 year, over 5 years. So Unity Software, carry on with the bleakness. Unity Software down another 14%, 14.16% overnight. They've had problems with their, I believe their AI. They've had to go back and recode a lot of things. It was making mistakes or something. I'm not sure of the details, but that's kind of one of the main problems there. Is it going to be ongoing or temporary? But it's come down a lot too. It was in November 18, 2021. It was $201. Now $35. Ouch. DocuSign, another big drop. It was 310, now 71, and down another 8.36%. That was another big ARK stock. I think Roku's their biggest one, but it's in the top. DocuSign's been in the top 5, and they've been buying, but it's continuing to drop. Can't seem to see a bottom. Cloudflare, ticker net, down another 11%. It was a high of $211, now 50. Oh, that seemed like a big bubble. I remember when Rivian and Cloudflare were pretty much seemed to be like the biggest bubble stocks at the time in November, early November 2021. Stitch Fix down another 15%. This one hurts me because I bought it, which I thought was at where I thought was a cheap prices, but I've been hurt. And this is funny because the market cap's now $767 million, and the revenue is like $2 billion a year. I don't know if that'll take a hit. We'll see. But it's down from 96 to 7. But the thing about this peak, because I know more about this company, that peak was to do with a short squeeze involved with Wall Street bets. So that was artificially high. It didn't kind of naturally go up, or even, it wasn't. It was during bubble times, January 2021. That's the peak of the bubble, but it did get caught in a short squeeze there. So that peak was way above what it actually was before that. And but still taking a huge hit, and they're trying to turn it around. I'll talk about Stitch Fix another time. I've done podcasts on Stitch Fix. It's not the time or the place, but taking a further hit now, just over $7. Meta taking a 7.62 hit again, and peak of $378 and now $181. Amazing. The mega caps are being hit. Shopify, another one, which is down to market cap of 40.96 billion, and actually Meta's down to under 500 billion. And Shopify down another 11.85%, and the peak was, get this, the peak was 1,690. It's now down to 324, nearly 325. Wow, these are just amazing drops. This is just a fascinating time in the market. It hurts if you own any of these stocks and you bought them higher up, but wow, this is just amazing. Pinterest down 23.64%, and that's of course related to Snap being in the similar social media and relying on advertising. So are they going to say the same thing? Real down 16%. to do with resales online goods. It used to be 28, now 2.66. Is that right? It was down 28. It was it was to $28 in February 2021. Now $2.66. I don't know this one, but is there a bottom in these stocks? Done Stitch Fix. The trade desk, of course, involved in digital advertising platform. So it was down 18.51%. That's to do with Snap, of course, but it's down from 107 to now 42. It's a stock. It's a favorite stock with retail investors really too, and also a Motley Fool favorite. So that kind of probably makes it partly a retail favorite. All right, that's all I've got for you today. Pretty amazing stuff. What's going on? So join me on Twitter at The Art of Value, and catch this video, of course, on YouTube or Spotify video and audio everywhere else. Okay, thanks, Scenic.